Dabanamona. Morning true, a very good morning to you, and welcome to the latest Business Advantage online business briefing. My name is Andrew Wilkins. I'm going to be your host for this morning's discussion, which is about business confidence in Papua New Guinea and the factors that influence that business confidence. Before we start, I'd just like to give you a couple of pieces of housekeeping. The first thing you'll notice on your Zoom screen, there is a Q&A tab at the bottom of your screen. Please use this if you have any comments or if you want to make pose a question to any of our participants this morning. And we'll try our very hardest to get to them during today's session. And sometimes even after the event, our participants are helpful and actually provide answers afterwards. So please use that Q&A tab. This session is being recorded. So if you have to duck out or if you miss anything or you want to watch it again, it will be available on our YouTube channel, and you will get a link after this event sent to you by email, as you will also receive any slides that are provided during today's session. So a couple of announcements before we start. The first one, just to let you know, we are celebrating this month the publication of our new business and investment guide to Papua New Guinea, Business Advantage Papua New Guinea 2021. We've been publishing this guide every year since 2006, and the latest edition, which is out right now, is full of an economic update on the country. It has information about Justin Smirk's analysis of our CEO survey. It has sector updates on all the major sectors in PNG's economy. So really good comprehensive overview of PNG's economy. It's also available not only as a printed magazine, but also available online as an e-mag. You can access it at businessadvantagepng.com/annual. I've also got some wonderful news for you today, and that is that our annual Papua New Guinea Investment Conference, which last year sadly had to be cancelled due to COVID, is going ahead this year in September, from the 7th to the 9th of September. The most important thing to note about it is it will be a digital event, a digital conference. And while COVID may temporarily stop the world coming to PNG and prevent larger gatherings, we're going to take PNG to the world. So I'm really excited about that event. It's going to be full of interactive sessions, interviews, panel discussions, you name it. And being entirely digital will give us an opportunity not only to provide some really compelling curated content, but also to reach a genuinely global audience at a time when international travel is difficult. So looking forward to that. You can find out more about it at pnginvestmentconference.com. Now, on with the program for today. The PNG 100 CEO survey has been running for a decade now, and it's been one of those things that we've had a lot of fun doing. Each year, we basically ask the same set of questions to our CEOs in Papua New Guinea, the CEOs of the largest companies, and we'll have a little discussion about exactly who they are a bit later on. But before I introduce Brett Hooker and Justin Smirk from Westpac to provide the analysis of the event, I've just got to give you the actual events, the actual results myself, if I just get it up on the screen, so that I can share that with you. This is the results of this year's survey. Now, the first question we ask all of our CEOs is basically, what were your profits last year against your expectations? So in this case, as you can see, clearly 2020 was a very disappointing year for many businesses surveyed this year. As the chart indicates, 60% of respondents said profits did not meet their expectations last year. 25% said profits in 2020 had fallen slightly short of expectations, while 35% said profits had fallen substantially short of expectations. Meanwhile, just as you can see from the chart, 27.5% said the businesses had met their profit expectations for the year. And that little slice at the top right, just 12.5% of respondents reported that profits had exceeded expectations. So a tough year in 2020. 2021, we wanted to know what their expectations were for this year. What they told us was that maybe they were slightly more confident in the year ahead, with 45% expecting profits this year to be better than they were last year. And this included 17.5% who were expecting substantially higher profits in 2021. And over a third, 37.5%, that's the bottom left-hand section there, in dark grey, predicting that their profits would be in line with last year. And meanwhile, almost 17.5% were anticipating profits would be even lower in 2021 than they were in 2020. Now, the next question we asked was about investment plans for the year ahead. And this could include capital expenditure on new plant, equipment, or other assets they might be planning. The investment intentions reveal a cautiously positive outlook around PNG's leading companies. Just under half, 47.5%, told the survey they were intending to invest more this year than they did last year. And as you can see from the chart, that black area, 27.5% saying they were planning to invest substantially more than they did last year. As you can see from the chart, 22.5% of our CEOs said they were planning to invest slightly less, with 12.5% saying they would be investing substantially less. And the remaining third said they were planning to invest a similar amount to last year. The next question we asked them was about their recruitment plans for 2021. And as you can see from this, the picture was cautiously positive. 42.5% of respondents said they expected to employ more people this year than they did last year. But only 5% said they were expecting to make a substantial increase on staffing levels. A further 37.5% said they would be keeping staff levels at the same level as the previous year. Meanwhile, 20% said they would be reducing their headcount in 2021. And there are a small minority who are going to make substantial staff cuts. The final slide I want to share with you before we get into Justin Smirk's analysis was about the impediments. Each year we ask them to list the impediments that are facing their business and also to give us an indication of how badly those impediments are affecting their business. And this is the list from this year. As you can see right at the very top, COVID-19 related restrictions, that should be no surprise at all, was the biggest impact on the PNG's largest companies. And you can also see, though, that the second issue, impediment of magnitude, was foreign exchange. So if we did not have COVID in the economy over the last 12 months, foreign exchange would be the number one issue facing business in PNG, followed by lack of government capacity, particularly the capacity of government to actually provide services and responses to business that business needs to do its stuff, followed by security, law and order, regulatory uncertainty, which is, I guess, capturing the stress around some of the government reforms and maybe the fact that we don't know exactly what they will be or when they're going to come out, and what sectors of the economy they're going to affect. And then you can see down the line unreliable utilities and so on. So that gives you some idea of the survey. And also, I guess, what I might do now is we might bring in Brett Hooker, who's going to, from Westpac, who's going to say a few words before we actually bring you the presentation from Justin Smirk. For reasons of practicality, Brett, we've actually recorded Justin's analysis ahead of time. That's for technical reasons, not because he actually is here with us this morning, I believe, or will be joining us a bit later on. So first of all, Brett, very welcome to you.
Thanks, Andrew.
Excellent. So I'm just going to hand over to you now, and when you've finished, we'll run the analysis from Justin.
Thanks, Andrew, and good morning, everyone. I'm pleased to provide the introduction to Justin Smirk, who many of you will remember from last year's PNG 100 CEO breakfast held in Port Moresby just before the COVID-19 lockdown. So I guess since then, virtual and digital events such as today's session have become the norm. However, we do indeed look forward to getting back to the face-to-face format in PNG in some time in the future. Listen, we've always been proud of our contribution to share our expertise and knowledge with the business community, and we are again delighted to partner with Business Advantage to bring you the results and analysis of the PNG 100 CEO survey. As many of you will know, Justin is not new to PNG. He has been speaking to PNG audiences for the past 10 years and gained an invaluable understanding of the PNG economic market. Justin is a respected economist, and we appreciate his contribution to the business sentiment survey. So I'm pleased to invite Justin to share his expert analysis and insights into the 2021 PNG 100 CEO survey results. Thank you, Justin.
And as we did last year, what we did is we handed over to you not only the results of this year's survey, but all the results of our previous 10 years of surveys for you to have a look through, and particularly to see if you could identify any trends and comparisons with previous years. So what have you come up with?
Well, we've come up with a few things this year there, Andrew, but I think it's pretty important to highlight that this is the survey that's capturing the COVID period and the recovery. And I think one of the things that when you're looking at the trends is we've seen the quite dramatic impact that the COVID shutdowns and restrictions have had. And I think it's also showing us the lingering effects that are coming through and the uncertainty that we still have. So if we go into the presentation and have a quick look, I'll just go it through right now and take you through. Really, the highlighting of what we're trying to do is just highlight that there's 4 key points. One is about the hit that came through particular profits around 2020. The issues around what we're seeing in terms of expectations for recruitment, investment, profits, they're all really going sideways. Having a look at the what that means for the outlook for growth, and then also considering what are the restrictions and how they've changed over time. Now, for the next series of charts coming up, just very quickly, a lot of them, if they're looking at expectations or results, what they're really doing is doing a net balance, and that is taking those who are answering positively and subtracting those who answer negatively to try and give you a feel, and then comparing that over time to how that's sort of trending. I will, however, highlight that it's not part of the survey, but just quickly to highlight that what we're going through now is a very sweet spot in the global recovery. Global peak with the very low interest rates, liquidity in the global system, lots of fiscal stimulus, manufacturing is coming roaring back around the world, and so is global trade. It's heading back towards more like expansionary levels. So while we're talking about this recovery that's going on with COVID, keep in the back of your mind these higher commodity prices we're experiencing. Everything is in a real growth sweet spot right now. And while we think growth will continue on through 22 and 23, 21 is really where everything hits the straps at full speed. And so if you really want to leverage into it, we want to be there ready now. In terms of the survey results that we're experiencing, first off, I was just looking at what we're talking about for profit expectations. You see how they dipped in 2019 and again, really underperforming in 2020. The firms early in the year were hoping for a stronger recovery. It didn't happen. They expected above average sort of recovery coming through 2020, and instead they got this massive contraction. Now, what you would expect is a bounce back for this year, given those kinds of expectations, but we're not seeing it. So this year's expectations are about on par with last's, which were way off the previous years. So given the level of contraction that we've seen, or the level of how disappointing the profits were last year, this is in itself is highlighting the degree of uncertainty out there, and firms are really unsure what's happening next. You'll see it, you break it down to the various components that have been in expectations, the recruitment, investment, and profits. Profits and investment really are tracking sideways, and recruitment improved slightly, but still well down from where it was a few years ago, and not much improvement from 2020. And that's really highlighting this degree of uncertainty with COVID and what it's done to our outlook. So based on this is giving us a very mute degree of recovery. If we try and expand, let's just take what's going on for the best data we've got that's timely is around employment. And the numbers that we've got here is really talking about your non-resources, such your general everyday businesses in PNG. What we try and do is link them to what's going on with the level of employment out there for the non-mineral sectors. And what it's saying, we've got to be careful in this environment. It's only during strong periods of time that we actually get the non-minerals employment really ticking up, like what we saw through 2018 and 2019. Through 2020, it dipped again, and the current expectations are that at best you'll get flat. Quite possibly you get another step back in non-mineral employment this year. So that's really highlighting that sort of more dynamic, your business cycles that are going in PNG this year is looking to be a mute year again, and businesses are not really gearing up for investment or employment.
So what you are finding, Justine, is that you are seeing a tally between actual employment and employment expectations as expressed by our survey.
Very broadly, yes. Yep. It's because the numbers are done once in a year, it doesn't tally, as you see in the chart, it's not a perfect tally, but it does give you the momentum levels, and it's really giving you a nice idea about what could potentially happen this year. And given what we've seen in history and the current read, it's really highlighting another contractionary year for non-mineral employment, which again is highlighting that if you really want this economy to start moving forward, we've got to focus on the domestic issues and how to get the economy moving again and opening up. And the issues we talked about earlier around vaccines is really critical for this one. In terms of growth, what it does suggest is we have to be a little cautious coming up on what we're thinking about we're doing for non-mineral GDP. You can see the big swings that we're getting in growth in the past, driven around what's happening in the resource sector. The swings in the non-mineral sectors has been less. Even looking at last year, the contraction in the non-mineral sector was a lot less than what we saw in the mineral sector. It was only down around 1.1%. However, expectations is telling us that we shouldn't expect, it's very much close to where it was last year, and last year was a small contraction. This year, the forecasts are that on its own, the bounce back of the economy opening up should be generating stronger 2.2% growth. Now, with the vaccines and opening the economies up, that is the potential what we should get. However, what it's telling us is to get that growth, you need businesses to reopen like they were before. If they're telling us they're uncertain and they're uncertain about what's happening, the risks now are asymmetric. That is, firms are nervous about opening up and how far they can take this advance, and thus it'll hold back the growth. So there are some question marks about how fast the rebound's going. So again, this is really why it's important to focus on how we can get the domestic economy going when you've got such a positive backdrop coming from the global environment. And again, it's local issues around, and I'll highlight some local issues around these questions that have been raised. And so actually a good way to sort of think about it. One of the things that's coming through that they're sort of highlighting is some of the biggest restrictions that we're experiencing. And I have to apologize for this chart. I didn't realize it was going to do that when we put it up into an event like this. But what it's really highlighting at this point in time, the COVID restrictions, the purple bars on the left, is the biggest restriction on the business. And that's really no surprise. So of course, as that unwinds, that again is a reason to open up. But before we get really excited, businesses are still telling us that foreign exchange remains a critical issue as well.
This is the red line on the chart.
That's the red bars on the charts. Exactly, yeah. Andrew. And so that's the issue that was in 2019. And it's actually worse, in 2020, and it's even worse than it was in 2019 or in 2018. So even as the economy opens up, what can hold back investment? What can hold back employment? It's that lack of access to foreign exchange and the ability for the businesses to operate as normal. It also does present, tells us what other things are going on in an environment where businesses are constrained. Things like shortage of skills and expertise is not an issue. It was thought to be more of a one in 2020. So at this point in time, because the business is constrained, that is not holding back the recovery. it probably will be further on down the track. And unreliable utilities, again, as demand's dropped off, so too is that being constrained. However, as the recovery comes on, those will start becoming constraints. So we've got this little window where we're getting back from a lower base, means we can potentially, if we get it right, accelerate faster than normal. But those roadblocks will start appearing again if we get that growth going as forecast. There is also sort of ongoing issues that we are sort of seeing with these events, and if you think about some of the factors that are least handicapping us around, logistics, it really has it's lifted as a little bit of a constraint compared to 2020. So 2021 is meant to be a bit more of a constraint. It's around sort of normal levels, and you can see why it wasn't a constraint in 2020. The economy was so constrained that there was no need for logistics. It is coming back. Still not as strong as the other factors, but it's coming back as an issue. And as the economy accelerates, you'd expect that becomes a more significant issue. Real estate costs aren't there. Employment costs are about the same as always. But notice too that inflation remains low. This does actually mean that with if inflation is not an issue for businesses, that it still leaves scope for the central bank to be using monetary policy and stimulatory policies to be coming through to stimulate. So that's a backdrop of where we are sitting at the moment, and it's really highlighting where we could move to in terms of potential risks. So to put it in a framework, COVID is the #1 restriction right now, and with the vaccines rolling out, you'd like to see that moving away. But then what we'll flip to is the other ones that are sort of bearing on us, and that is the foreign exchange, and of course, what we're going to see coming through, and even though it's not such a constraining effect right now, logistics will be rising as the economy reopens. And again, such issues as utilities. These are things that the ADB is also been mentioning quite a lot in their reports, even though they have a fairly positive outlook for the growth profile. So to bring it all together, we are in a very sweet spot for global growth. All policy measures are set on trying to fire up the global economy, and it's working. Commodity prices are really strong. There's even talk about super cycles, which I'd caution on. There's ample liquidity and fiscal stimulus out there, so we need to get things right in PNG to allow the businesses to leverage into that. And the 5 key points that we're sort of highlighting from this survey is expectations all over remain subdued. That means there's conservatism at businesses who aren't going to dive in as the economy reopens. That will hold back growth. You are going to get constrained recruitment and investment, and of course behind that, muted profits. Those muted expectations make us question just how strong the economy can fire up through 21, through this year, unless we get some policy settings right to support it. And while those COVID disruptions may be the biggest factor affecting businesses, those FX issues still scream out. So while the central bank and the government remain focused on supporting the currency via the current policies they have, it will act as a constraint on local investment and recovery, and it will slow the recovery down. Now, unfortunately, while I'm doing this, I am going to have to quickly give you my disclaimers that come through every year. But before I do that, I just want to highlight Westpac IQ, Westpac Wire, great sources of information. That's where we talk about these things. And on those ones, you will not find this kind of disclaimer, because unlike this, they're not coming from someone who provides financial advice. All I'd like to say is my presentation at the moment wasn't making any recommendations to buy or sell any financial products. What I'm trying to do is give you a scenario that's the most realistic outlook we can put together, but highlight again, lots of uncertainties, and I always highlight everyone should go out there and try and find as much broad information they can, competing ideas about the outlook, and really think about your risks and opportunities that apply to your own business. So Andrew, I love this opportunity to dive deeper into your survey. I hope I can do it again later at some stage, and I'd like to thank you and hand it back to you.
Thanks very much, Justin. And maybe while I've got you, you mentioned about policy settings, and I don't know whether it's possible to get you back on the screen. What, if anything, do the results of the survey tell policymakers about what could be happening or what should be happening in PNG's economy as far as policy is concerned right now?
I think the key sort of messages coming through is how you can smooth the transition and speed up the opening of the economies again, and providing the confidence that you won't get the lockdowns and shutdowns again. I mean, everywhere in the world is going through this problem right now.
Absolutely.
I mean, you've seen the different examples of this in the world. You've seen this example where in countries like the US and in Europe and even the UK, where they've had less shutdowns and less lockdowns, and they're focusing on rolling the vaccines out. Australia's, on the other hand, has completely shut the place down and prevented things from coming in and going out. And we've had a very limited rollout on the vaccines. Great at opening our own domestic economy, which is actually opening and firing, but how far can we go without opening our borders to further trade and exchange? So you can see those contrasting ones, and in PNG they seem to be sort of trying to migrate through the middle and really focusing on what they're trying to do around both reopening from all the shutdowns they've had, but also how they can then move on with the vaccine programs and such. So the vaccine program is going to be very critical. It's how you can bring back confidence in the businesses. So you get the vaccines right, the economy starts reopening again, people start getting confidence to do things again. And then how can you get the business settings right? How can we get the foreign exchange settings right? The credit situations right? And also how can we get the underlying what's happening with SOEs and allowing the businesses to start investing and growing inside of PNG itself too. And there is going to be questions raised around foreign investment and how that's treated within PNG in this new world order that's facing these question marks about coming and going and border controls. So big issues, and I don't think it's going to get any easier for anyone from the business side or the policy side to get these things right, but we do need to be discussing them and going through open debates and thinking about what is the best for our local conditions for what we can do to reopen our businesses and economies, and basically allowing people to behave as people again, doing social interactions and allowing them to buy and sell and exchange as they did in the past.
The other issue you brought up, and it was very, very clear when you put up the chart that showed GDP growth over the past decade and the enormous spike that PNG experienced in the early noughties with the creation of the PNG LNG project. That obviously had an effect on the foreign exchange situation, which to a certain extent it's still a hangover we're still having from that party. There is the opportunity now that there's been some announcements about the Papua LNG project, which is being built by the French supermajor Total, that we might well have the FEED or the front-end engineering and design process start next year with a final investment decision the following year after. Based on what we know about the impact of the PNG LNG project, is that going to solve all of PNG's foreign exchange problems at one fell swoop? How successful is that going to be in sorting that problem?
It will definitely be sort of adding to it, sort of helping to remove that problem. The way they're setting things up now is quite differently and allowing for much more of the inflows of the foreign exchange to come straight through. So it's definitely moving the ballpark in the right direction, and particularly if commodity prices remain at these rather elevated levels, which, to be fair, for at least the medium term, gas, oil, energy prices are remaining reasonably well supported compared to where they've been in the past and what the longer run expectations are. So there is this window, I would argue, of opportunity probably within the next 5 to 10 years to try and get this right and actually add that further value. I think also what they've been focusing on, and what is just as important, is how you can get not just how you can get these settings right from a macro FX trade policy point of view, but how you can get flow-ons to help the non-mineral economy, how you can broaden out the real macroeconomic effects beyond just the financial side into the PNG economy. And those are some of the issues that are being addressed now with the different types of policies they're implementing around those things. And to me, that's one of the bigger ones that we need to answer. How you can get a sustained growth period out of these investments rather than this really big boom bust cycle. And the fact that it's being drawn out now, in some ways, may actually help this cycle, rather than being all hit at once and creating a big imbalance in the economy, which is boom bust. Perhaps a much more of a drawn out positive cycle, which adds growth in a more incremental way, which helps a greater dispersion of the benefits rather than being concentrated in a small bit. So there's opportunities in what's happened. There's some opportunities in the disappointments, the fact that those projects weren't approved earlier, and the fact that may be drawn out a little bit longer and add to growth. And there's some actually opportunities in the fact that this COVID period has sort of revealed some things around the energy market, in the sense that, yes, it's adjusting towards low carbon, but it's doing so at a sort of much more staggered pace and at a rate which the major companies are adjusting to, which means there's a more sustained price equilibrium that we're experiencing now than perhaps what we thought even 6 months to 12 months ago. So there's some positive news and ideas that can come off from this negative backdrop.
Justin, thank you for your time today, and thank you for all the hard work you did in putting in your analysis. As you mentioned, we hope we can work with Westpac again on this survey. For the moment, though, thank you very much indeed.
Thank you, Andrew. It's been fun and interesting as always, so I appreciate the opportunity.
Okay, thank you. There we have it. Our sincere thanks to Justin for his analysis. Now, joining me now is a couple of special guests. Back, Brett Hooker again. Welcome, Brett, back to us. But also, I'm delighted to welcome today a special guest from Lae, PNG's second city and manufacturing hub and logistics hub, John Byrne, who is the president of the Lae Chamber of Commerce. And I believe also Justin Smirk is joining us by phone. Is that right, Justin? Can you hear me?
I can hear you. I hope you can hear me.
Brilliant. JB, are you in with, can you hear us all right?
I am here loud and clear. I've never been called special before, but I'll take it. Thank you.
Good on you. And you're okay, Brett, as well?
Yeah, thanks, Andrew.
Fantastic. Well, JB, why don't we start with you? Based on what you've heard this morning, how does that tally with what your members are telling you?
Well, I have to put my disclaimer first, unlike Justin to put his last. My disclaimer is I started my life as a mechanic and I'm still a mechanic inside. So I look at all these economical outlooks and various things with a weathered eye and also a view. Yeah, look, there's a lot of relevance in exactly what Justin's put up. The first question I ask is where are our 100 businesses? How big are they and what size are they? I'd like to see some analysis a bit deeper on the breakout of who those businesses, not the name of the business, but by category, because Papua New Guinea is a land of two countries. It's a land of Port Moresby and the rest of the country. And most of my answers and comments will be related more about the rest of the country, if you like. So, and that's not a negative statement; that's just a fact. Yeah, look, there's one example is that the logistics part of that survey, the answer to the logistics part had stayed fairly static. I would think in Moresby, logistics is very easy to get around. In the rest of the country, the roads are broken, various other things are a real challenge. So if we were getting a higher balance of businesses from the rest of the country talking, that number would probably have gone up a lot more. That's a challenge.
It is. Yeah. Just to answer your question, JB, about who is in that 100. Obviously, there is no official list in the country of who the top 100 companies are. So we've drawn up that list based on our experience of operating in PNG since 2006. And what we've done is taken a sector approach. So we've gone, okay, let's look at the major industry sectors that Papua New Guinea's economy is made up of. And then let's look at the major players in those areas. So mining, petroleum, agribusiness, fisheries, forestry, services, manufacturing, and so on. And that's what we've basically done, is identified those major companies. We do say that we don't identify those individual companies because obviously some of the information they give us can be sensitive. But that's basically our methodology in compiling that list.
Sure. No, that makes good sense. Thank you.
Yep.
Okay.
Brett, just to turn to you, obviously you're talking to a lot of businesses, you're funding a lot of businesses in Papua New Guinea. What are you hearing from them about particularly about the list of impediments we put up there, the challenges they're facing right now?
Yes, Andrew, and I guess, yeah, to John's point as well, I mean, we do get that holistic view across PNG with our customer base, I guess, operating in all parts of PNG, and obviously just not concentrated in Port Moresby. It's a diverse client base, and they are each facing, I guess, various challenges and business impediments. What I thought I might do is I might just sort of focus in on three, obviously the top two, because they're very topical, and then an outlier, and break that down into our different customer segments to see what the effect is. Mm-hmm. I think if we start with that sort of micro SME space, domestically, obviously, COVID has had an impact on that part of our customer base, particularly with the lockdowns and restrictions. So, they were largely impacted by restricted movement and access to their customers, access to marketplaces, and again, like John pointed out, purely just access to transportation routes. Similar challenges in that if we pop up into that SME, which is a very broad segment for us. They have also faced significant challenges from restrictions and limits to their customer base. I guess in that commercial corporate space, as we sort of creep up into those sectors, I guess the sectors that have experienced the largest downturns predominantly, which we've probably seen globally, is really hospitality, accommodation, air travel. I think the PNG hasn't escaped what the rest of the world has in that space. And in the resource sector, I guess the major impact for the resource sector has been the FIFO worker restrictions, quarantining. We've seen Octedi obviously having to do large amounts of quarantining on their own site, and particularly locking down the whole of Taboola at times just to keep that mine operational. And I think that is really sort of the impacts from the COVID side. However, interestingly, what we have seen, right across the portfolio, is that the majority of our business customers seem to have largely weathered the COVID storm. And I think this is really evident by the fact that, if we turn our minds back to February last year when we offered assistance to our customers, like banks again around the globe did. So we brought out assistance packages to defer loan repayments, look at restructuring facilities for people, just making sure they've got sufficient capital to keep trading. Our original forecasted uptake of those packages was well under where it ended up. And when I talk to my colleagues at the other commercial banks, very similar story. And I think if we wind the clock forward to now, the amount of clients across the commercial banking sector that have required COVID assistance packages is quite minimal. So does
that suggest to you that the new normal, as we call it, is something that's enabled businesses to stabilise?
Yes, I think so. We raised the question as well around, were businesses in Papua New Guinea already sort of match fit financially to cope with something like COVID? And, does it lean more towards, not a COVID impact, but just a general economic downturn impact that the country has been, faced into for quite a number of years? So, I think interesting debate each way on that aspect. But, if we just look at the raw data, obviously, as Justin presented, customers have had significant impact on profitability. However, they seem to have been well capitalised to at least keep up their commitments on the funding side. So, so something that we watch very closely, obviously, and we'll continue to watch. The foreign exchange side, I mean, again, it's it's up there as the number 2 impediment. Foreign currency availability continues to be an impediment for all business. We see that across the SME, commercial and corporate segments, and they all have a need to fund their import requirements. Again, I guess the recent positive news on Porgra potentially resuming operations, obviously welcome news for FX markets in PNG, and the central bank continues to provide US dollar intervention to help support the FX backorder backlog. However, foreign exchange shortage continues to be the largest impediment for business growth and customers in our portfolio. And this is, obviously reflected in the survey results. I mean, you touched on your discussion there with Justin around obviously the again positive news for the FX space with the Total Papua LNG project. We would expect that this will provide some boost to business confidence. However, we're unlikely, as you pointed out, to see any real activity in the short term on that.
Noted. JB, sorry, could I just bring JB in here, Brett? Sorry, JB. There's 2 or 3 items on that list of impediments that refer to government. There's not only the lack of government capacity, but also regulatory uncertainty, which we can probably say surrounds the Take Back PNG reforms that the government is pursuing. As far as your members are telling you, what sort of things could the government be doing at the moment, or should the government be doing to support business?
Well, the first thing is to make the regulatory process a lot easier and more efficient. There's too many steps to climb over to get things done, too many interdepartmental issues that cause issues and challenges on the way through, and it hampers business. It truly hampers business. So, if you look in 18, the spike that Justin showed on his chart of business confidence, that was based, in my view, around the fact that we had a change of Prime Minister. And everybody said, yep, the world's going to change for whatever, and that spiked itself up. We've had now two attempted votes of no confidence, which just delays the whole process and makes everyone duck and hide inside any governmental office anywhere in the world. So the processes get stagnated, the economy stops based on decision-making factors. There's all those challenges that really affect businesses. So it's very much a challenge in this country, and I think you'd agree with that, Brett, that it's a challenge governmentally getting things done with any form of streamlined process on the way through. So yeah, that's a real challenge for business.
And I guess, Brett, to continue that part of the conversation, there are some quite major reforms that are being flagged by government. There's changes to oil and gas and mining laws. There's even been some suggestions for changes to the foreign investment laws in PNG. So how do you see that affecting business confidence?
Very much, until somebody knows what the game's played. If you're playing a game of soccer and somebody comes out midstream and tells they're going to change the rules, no one knows what the rules will look like. So, the MRA, the Mineral Resource Act, for example, that's been hampered. It's slowed down a lot of mining resource companies saying, okay, I want to apply for a license. I'm doing this, but I'm not going to do that until I know what the rules of the game are. The Foreign Investment Review Act, that had a full head of steam running until the change of government. And when that change of government came, that sort of changed the whole dynamics of that act. It's still underlying and it will still happen. And there's lots of elements in it that should happen. There's no doubt about it. But those things just say to businesses, well, how long am I going to be here for? Because the Foreign Investment Review Act didn't allow for a grandfathering clause in its original process. So that gave businesses some cause for concern without question, as it would anybody who's been here for 5 years or 25 or 50 years. All of a sudden, you don't have any asset. Your blue sky is gone. If we have blue sky in this country at all, in that regard. So that gave some cause for concern. So that whole conversation was very hot topic, and then the change of government changed, and then we've had Mr. COVID arrive in town on his big horse and given us a real challenge. Now, just on Brett's point about Porgera, I'm glad you mentioned the word Porgera, Brett, because no one else has mentioned it. In this side of the country, that has had more of an impact than COVID has. Absolutely. Because the movement of goods up and down the highway, if you want to call it a highway, the movement of goods up and down the highway, and all the small businesses and big businesses and all the manufacturing coming in and out of the port, and the number one port in the country, which is in Lae, has been hampered. And that's a governmental decision. They have every right to have that debate. They have every right to put it on the table. They want to change the rules. I have no problem in that at all. But for it to stagnate for as long, it just holds the country to ransom and it makes us look a bit foolish in the overseas investor world. hampers our forex ability. As I said, I'm a mechanic, not a financial whiz like Brett and Justin, but I know it hampers the forex part of the world. It also has all those other impacts. So they're challenging things for sure. So COVID has bitten in here, in this part of the country, but nowhere to the extent that it has in Moresby or Western Province, luckily. But the part that Brett talked about in the economy, the hospitality and the tourism, if I looked at our segments, our business, manufacturing has grown. Manufacturing has stayed stable or grown, and we are a manufacturing town. So we haven't had, most of our businesses are pretty solid. In fact, some of them have grown commensurately, even with Porgera being closed, because believe it or not, when Porgera closes, all the illegal miners go into the mine, and they're the richest people in the country with gold in their pockets. So they're buying more Coca-Cola and more Nestle products up there than they ever had before. So getting up and down the highway. So I'm talking in circles, but governmental decisions delaying and playing tactics is hurting a lot of the economy. And it's a difficult game for anybody to play at that level. I get it.
Noted. Justin, are you still with us?
I am still, indeed.
Wonderful. We've just got a question which actually comes from Christian Lerberger, which you might want to comment on. His question is this: the International Energy Agency this week released a report that to meet climate change goals, the global community cannot start any more oil and gas projects. Starting now, what risk does a vigorous global move away from gas investments pose to PNG?
If you take it strictly on the face value, what they're saying there, they're basically saying there should be no more investments in fossil fuels at all. We know in the short and medium term that is not possible because what we're seeing is ongoing demands in this transition period. So while the transition is going through quite solidly, it does mean you will continue to get, at least for the near term, the next 5 or so years, continual investment into the sort of gas profile as it's been used as a transition fuel. But what it does also highlight, though, is the world is actually shifting. If it keeps on moving in this direction, the use and demand for investment in fossil fuels is contracting. We're seeing it in Australia, particularly around at the moment with coal.
Yes.
The focus is, we're seeing lots of less investment going into coal, and a lot of investors are pulling out of the coal industry. And that will eventually sow to other types of fossil fuels. We're not there yet. The IEA put out that sort of report trying to spike and spur on debate and ideas around this movement. We're seeing big transitions happening with the emergence of electric cars, with the use of alternative sources of energy, and also with the improving efficiencies of vehicles and any types of energy use overall. So it's a warning that you can't rely on gas forever. It probably remains a positive for the near term, but as we move, if you want to thinking about what is sustainable for your children, investing in gas is unlikely to be producing a result when our kids leave high school. I guess that's sort of the bottom line. It's part of the transition process.
So PNG has a window of opportunity with gas, which is likely to close.
Yep.
Yeah.
It's likely to close. I mean, who knows which way the world will go in the future, how things evolve and develop. There's always a lot of uncertainties. But on current trends, current policies, current settings, current objectives, what we're seeing in investment around the world, yeah, you've got a window, and if you don't grab it now, it's not going to be that it'll be very hard in 5 years' time to have the same debate.
Noted. With that,
just
sorry,
one
one more?
quick or two.
Yep.
JB mentioned logistics. He's critically right. It goes beyond for the regions, just the idea of businesses moving around equipment. It's also people, health, education. So much is linked to having good logistics in the regions that I cannot but support JB and his point about that being a major issues in the regions, and one that needs to continue to address. If you want small businesses to grow, if you want health conditions to improve, if you want education to improve, at the bottom of it lies logistics again as well.
Excellent. Gentlemen, I'm going to leave the conversation there. There's a lot more we could be discussing, but we just have we're pressed for time this morning. So thank you very much, Brett Hooker, John Byrne, and also Justin Smirk for joining us, and also for everyone for your questions. We're not quite finished with the session today. The next part is a new segment which we're just introducing for the first time here today. It's called The Inside View. And basically what we've done is we've chosen a particular topic to talk to someone who's an expert about. Today, we're talking with Tony Waters from Speedcast about the impact of satellite communication, the new generation of satellite communication technology and other advances in technology, what's coming to PNG over the next couple of years and what sort of changes we can expect. So with that, I'm just going to run this short video and then we'll be back to have a short chat at the end of the session. So just stand by. I'm going to welcome Tony Waters, who is the Senior Sales Director at Speedcast. Welcome, Tony.
Thank you, Andrew.
A lot of people may not understand what it is that Speedcast has been doing in Papua New Guinea for quite some years now. So perhaps we could start by just covering what it is you actually do.
Okay, we are a telecommunications provider in Papua New Guinea and have done that for many years now, so 12 or so years. We cover the whole country with internet access, private network solutions for customers. Primarily the solution side is our forte. So in other words, you might have 6 or so sites, offices in Papua New Guinea, and you want to connect those up and connect them back into remoter areas or back to Port Moresby or and so on. So we're a telecommunications provider and services provider in PNG.
And how do you fit into the wholesale retail network that exists? So, for example, we have Dataco, which is the wholesaler in PNG. We have Digicel and B Mobile and Telecom is the retail arm. How does Speedcast fit into that picture?
Okay, I mean we certainly are business delivery, business to business services. So we have a number of clients. Where we're delivering that private network or that internet services. Now, there's some occasions where there may be a company who have residential users and they just want to connect those up. So we'll do those unique sort of solutions. But we're really a business-to-business provider in PNG.
One of the sites I think you work on is Lihir Island, which is a very remote location. Perhaps you could give me an example of, use that as a case study, as an example of the kind of services you're able to offer.
Yeah, I mean, in that particular instance, we've got a major client there on Lihir, Anichua, who we work very closely with, and they operate with us an O3B terminal, which is a satellite terminal with low latency in the MEO orbit, the medium Earth orbit, which gives us sort of low, it's almost fiber-like type service, which we then distribute around the island using wireless technology. So that is for Anichua's offices and for other locations. You know, we've recently worked with them on some high value internet services for their for barges in the Lihir Island to house people during a COVID situation. So it's been quite a unique time there.
And I guess one of the advantages, as far as I understand, of that satellite technology, as you mentioned, the latency, that's about the speed or the distance between the satellite and the Earth, is it right? So the closer the satellite is to the Earth, the less wait time, the more reliability there is on the signal. Is that how it works?
So, yes. I mean, normally, you know, in the last, 30 years, satellite has been at 35,000 kilometers above the Earth in the geostationary orbit. So, you know, it takes a quarter of a second to go up and a quarter of a second to come back. So that half a second, you know, has been traditional for many years and used. Now, when that is one way, such as some TV broadcasts, there's no issue with that. I think what has become more and more is that, people need quick keystrokes and quick responses, and therefore using lower orbit to reduce that latency has been something that companies such as SES and others have approached, and other companies, to get these satellites into a lower orbit, which allows you much less than that half a second. We're talking about 150 milliseconds, for example, in a medium space orbit. Which obviously is what we're more used to in today's world. Quick keystrokes, quick downloads. That sort of is where people want to be. They don't want half a second. Half a second of latency is sometimes difficult. There are many products to try and overcome that and buffer that, and cache pages and so on. But really, you need to try and reduce that latency to speed things up in today's world.
I guess one of the challenges would be delivering a solution in a particular location using particular technology. Are you wedded to a particular technology, or is it a question for you of actually finding the right technology for the particular case you're presented with?
And I think that is the point of Speedcast, is we're not tied to a technology.
Right.
But we can move across, in some cases we can use fiber. In other cases, we will use C-band satellite for high rain conditions. We can use C-band VSAT, or we may well use an O3B system, that what I was just describing, the lower latency service. Mm-hmm. And moving forward, we can look at the LEO services, which is even closer to the Earth, and therefore even lower latency. So that mix of technology is really where Speedcast has its forte across technologies.
What would be the particular challenges of operating in a country like PNG?
Look, I think it is terrain, it's environmental. From humidity and salt, it's landowner rights, in terms of putting towers up or putting specific things on landowner property, and how do you, so there's many issues. But, a country still prone to earthquakes, and that sort of thing. So in some cases, satellite is better suited in that environment, actually, because fiber will tend to break with an earthquake.
Yes, it has done, yes.
Yeah. So satellite, particularly some forms of satellite, C-band has a bit more tolerance on moving, and is useful in those environments,
One of the things that the tech people have been telling us for some time is the emergence of the Internet of Things. And I'm wondering how much of that is influencing the service that you provide now. More and more items are being connected to the internet, not just people and computers, but also devices, machinery, and so forth. Are you seeing that a trend as far as the work that you're doing in this region?
Yeah, absolutely. Yeah, and we're involved in various trials where we're using some of that Internet of Things technology, both as for our satellite services as a backhaul. But then we're using our wireless network, say in Papua New Guinea, or in Port Moresby, or in Lae, where we can use some of that wireless technology to connect devices, whether it is LoRaWAN is an example of a wireless technology used. There's other forms of technology where trackers can be used and so on. And we're doing a lot of work in that area at the moment.
So I'm wondering, what is the shape of telecommunications to come? What are you seeing in your other markets, maybe the more developed markets, that you think is likely to come to PNG over the next year or two?
Look, we're working closely with the LEO providers, such as the the SpaceXs, the OneWebs, the Telesats. These organisations are deploying these constellations of LEO satellites. Now, there you have a solution which would be very really quite a game changer for Papua New Guinea. You can roll out a lower cost terminal to a remote area and get that low latency, high speed internet with at a good price. And that is really the target, I think.
So typically, if you had in your mind an ideal customer for your products or your services, what would characterize that company?
The Speedcast are focused on the solution. So that solution, whether it is a number of offices, so multi-sites, perhaps they have head offices not just in Australia, but they might have a head office in Asia. Or now we have network that can connect those sites up in Asia, in UK, in the US, and bring that back into somewhere like Papua New Guinea. And that's pretty unique, I think. So that would be an ideal customer, would be a multi-site in Papua New Guinea, but headquartered elsewhere and either needs that private network or internet access.
And I guess also with the fact that travel is very problematic at the moment, the demand on internal communications is enormous, isn't it?
Absolutely, yeah. I mean, we've seen that so much so now, that everybody's doubling speed in PNG, and thankfully that price has come down dramatically. A lot of people working from home in PNG now. So connecting up, residential houses and maybe using the office bandwidth for the home users. So this is something that's quite unique, and it's a nice little solution that we can do, which is, if they're not in the office and they've got some bandwidth in the office, we can use that pool of bandwidth to serve the homes. So being across all of those technologies gives us such a redundancy, a solution for a specific customer.
And that's it for today. Our sincere thanks to Tony Waters and the team at Speedcast for making that interview happen. I'd also like to thank Justin Smirk and Brett Hooker from Westpac, and also John Byrne from the Lae Chamber of Commerce for joining us this morning. That's all for today. Thank you for participating. This online briefing is one of a series that we've been running since May last year, and we'll be continuing to do in the future. Watch out for future ones. In particular, watch out for the PNG Investment Conference, which is taking place on the 7th to the 9th of September this year, a digital conference first for PNG. Then, in the meantime, if you want to keep up to date with what's going on in business in PNG, businessadvantagepng.com is the place to go. Essential reading for all PNG-focused executives, and we're also on all the socials as well. So with that, I'm going to say good morning to you. Hope the rest of the day goes well for you. Please stay COVID safe and take care of yourself and your loved ones, and may your business have the advantage.